Hello. In this video, I am going to demonstrate how to lose money by winning every single trade. As difficult as that actually sounds, it is very possible, and I'm going to demonstrate that. I in my FTX account, and as you can see, I have been losing, a lot of money. On the 1st of September, I started an experiment. That experiment led me to question whether or not I could deal with sideways markets with the savings account in a way that would profit on a continual basis, such that instead of being channel locked, I could actually find a way of reaching the bottom and selling one position at a time in a zigzag pattern, so that every time the price dropped 1%, I would make a purchase. If the price increased 1% from my purchase, I would make a sell. That would, of course, give me 0.5% profit. The theory is that if I did this over and over on a sideways market, I would literally profit constantly. And the theory does sound nice. But as you can see from my actual account balance, it didn't go so well. Now, I created an experiment where I could keep track of this 1% boundary. And that is here. You are looking at a table where I traded TRX and only TRX. I did 10% purchases. Let's start with this table. The far right column, the column that shows up under my battery signal, it looks like a nuclear symbol. That is the balance of my account. I started this experiment at $543.95. And I say this experiment because I've been trying to fine-tune, perfect, and tweak the equations for the last month. But this one was running just a little over 24 hours. And you'll see between the starting balance at the top of the column and the ending balance at the bottom of the column, I lost money. Each and every step, you'll see the account never actually gained back what it lost, even though every single selling trade earned 1% always. The middle column, or column number 2, the one that's underneath of the half-looking orange symbol, that is my purchase price at each stage. Column number 1, under the time, that is the price that the asset had to drop to make another purchase. So column number 1 is always 1% below column number 2. Column number 3, the only column that has nothing above it at the top, that is the selling price that the asset must achieve, and that is also 1% above the purchase price. So as you can see, the highest I ever got to achieving was only within a few pennies of my original 543 95. And there were a few times that I did get back up there. But as you can see that each time I did, 543.91, 543.90, 543.88. I never was able to get back to my actual starting balance. Even though I won every single trade, I lost money. Now, thankfully, these were only 10-cent trades, but nonetheless, you can see it still cost. It took me a long time to actually figure out why this was losing money. Ironically, the answer is very simple. Throughout this process, I ignored one critical principle of mathematics. I ignored the law of averages. Every time I made a sell, I was below the average, and my losses were always the average minus the position. As you can see, it's only pennies, but those pennies add up after a while, especially after a month of trading several different coins, which you can see from my results. I took a pretty steep hit. So from the standpoint of my balance, you could see that it took some very big losses in this process. And I never really recovered. No matter how much I refined the equations, I just ended up losing more and more. In trading, the only way to make a genuine profit is honoring the law of averages. Whatever your selling price is, if it is not above the average of your wallet, you are going to take a loss. There is simply no way to avoid that. And the worst part of it is, you won't even see that loss in the long run unless you do something like this and literally track your budget at each and every transaction. And then you can see through a series of transactions just how well or how unwell, in this case, the process really was. And in this case, the process did a number on me. And I lost a lot. Even as the price was climbing in a slightly bullish manner, I still lost money because I didn't honor the law of averages. That is what sets Jackrabbit above the rest. Understanding the law of averages is critical to making profits. Yes, I know it is a royal pain to have the savings account module or the DCA module stuck in a channel locked position for a long period of time. But trying to get around that is a loss. Trying to break the law of averages will result in losses. Now, losses aren't always a bad thing, but in this case, as you can see from these numbers, this is a bad thing. It's bad because you don't see that you're losing. 543.95 to 543.91. That doesn't seem like a large amount of loss. And in fact, it's not explainable directly when you know that each position is actually selling for 1% profit, and can verify that with your exchange, that you have 1% profit. But that also is what shows you some of the problems. Let's go back into this. And let's go to one of the coins I traded. As you can see, by watching the prices, you can see the pattern just on this one screen. I purchased at 165, I purchased at 163, 162, and 160. Now, 160 matches up with the 162.11. That's a profit. 162.05 matches up with the 162.11 again. That's a second profit. 165.50. That's still waiting to be sold off. But 163.88 and 163.70, that's a slight loss. But as you can see, you could actually match in reverse order. The ones that make the genuine profit are the single purchase, single sells, such as the 163.96 and the 165.28. But once you hit averaging, and you start to average in appropriate to the laws of averaging, you see the losses begin to take shape. Mathematics is a tricky thing, and theoretical mathematics makes the world look great. I should be making bucket loads of money with this algorithm, but I'm not. I'm losing for winning. So the moral of this story is, don't ever break the law of averages, because you'll lose money and won't even see it coming. Until next time.